Welcome back to Grade Academy for this lecture in accounting. We're on chapter 6 and we're now doing lecture 6.2, which is the second lecture on service firm accounts. Now, in the last lecture, you will remember that we did, if you like, the statement of capital at the start in order to work out the revenue reserves. And then we had to prepare a special purpose, or if you like, the profit and loss account for the shop that was being used in the health center. Now, in this lecture, here's the question, and that's what we had done so far. Okay. Now, in this lecture, what we're going to do is we're going to do the actual profit and loss account then for the health center itself, and then at the end we'll do the balance sheet. Now, just moving on there for a second, when we're doing a question like this, it's very important that you actually not only, like I said already, put the title of the question, it's a profit and loss account for the year ended 31st of the 12th, 2020, but you must also put in the name of the business, or there's a strong possibility, depending on the year, that the marks, you could be penalised. So anyway, you can put in the profit and loss account, the income and expenditure, or the operating statement of Grimes Health Centre Limited for the year ended 31st of 12th, 2020, and that's perfectly okay. Now, so you lay it out like an income and expenditure account, really. And, on the top side here, we have income. Now, the first figure you would put in, of course, would be the profit that you made on the health shop, which was 31,550. Now, where will we find all the items that relate to income? Well, virtually all of them will be on the debit side of your receipts and payments account. Now, it doesn't mean that all these items are actually incomes. It could be a loan or something like that, or it could be a grant, but this is where you would find income items. Okay, the next item then, well, one of the items, I just have it there in the solution, is your investment income, 7,500. Now, an interesting part about that was that, okay, we were told the investments were 250,000 euro. Now, there was no percentage with them. So when we're given the interest on the investments, we have to take that as the absolute figure for the year, unless told otherwise. If there was a percentage figure here, we'll say 10%, we'll say, or 5%. Say if there were 5% investments, well, then you should be receiving 5% of that, which would be 12,500. But that is not the case here. It's just a straight figure, so it goes straight in. Now, and there's your figure there. Now, the first big figure in this question will definitely be the income for clients' fees. Now, we were told in the question that, okay, we actually received clients' fees of 275,400. But now we must take account of there was clients' fees paid in advance at the start of the year of 6.2. We're told in working number 2 here, or information number 2, clients' fees due at the end of the year were 920, and the clients' fees prepaid for 2021 were 1,540. Not forgetting that there was a dishonored check here from a client, and the amount of the check was 400 euro. So how do we actually deal with that in the accounts? Well, I suppose we go to the workings. Now, and the workings there are on page 43 of your booklet. First of all, our starting point always is, what do we receive in the bank account? We receive 275,400. We add the amount that was prepaid in 2019, even though we didn't receive it this year. We have received it last year, and therefore it refers to this year's accounts. So it goes in. We have paid 1,540 this year, but it relates to next year. So we do not put it into this year's account, so we take that figure away. Now, the interesting thing here is, if you like, that there was 920 due at the end of the year, we were told. But that did not take account of the 400 dishonored check. So the 920 plus the actual 400 means there's actually 1,320 due to us at the end of the year. However, instead of having received 275,400, we've received 400 less. So if you like, really, this 400 and this 400 are cancelling each other out to a certain extent. And the profit and loss figure, the income figure in the profit and loss account is 280,980. Now, and there you have it there. Now, Then you have all the expenses. Now, all of these expenses are pretty much standard expenses in the sense you'd see them all, in a lot of different types of questions where you to do the adjustment. Now there will be no drawings, if you like, because it's a company account. But after that, you have to make allowances for stocks, you have to make allowances for prepayments, and you have to, make adjustments for amounts due at the end of the year. So I will just go through the workings here, and rather than flicking over and back pages, I'll do all the workings here, just do a little explanation if I can. Now, we paid stationery 2,050. That was the payment that we made, but there was a stock of stationery at the start, I should say, of 550. So that actually means we must have used 2,600 worth of stationery during the year, and that's the figure that goes in as an expense in the profit and loss account. Light and heat, we actually paid 2,510. Now, okay, we add the stock of heating oil at the start because that's what we would have used this year. We take away the amount that was relevant for the shop because now that's included in the shop profit. We take away the stock of oil at the end of the year because that was 300. We didn't use that this year, so it'll be used next year probably. That should not go into this year's accounts. But then we owe at the end of the year, electricity due, 540. So therefore, the P&L expense, the actual payable figure for light and heat, is 2,910. And that's the figure that will have gone into the, if you like, the profit and loss account here, 2,910. Now, by the way, the laundry figure was a straight figure of 3,020. So if you like, there was no adjustment to go with that. Now, cleaning. Now, we just had to watch the cleaning figure because, yes, we paid 3,100. It referred to a 3-month period. And 2 months would relate to this year, November and December. So therefore, 1 month or 1/3 refers to next year. So we take away 1/3 of 660, which gives us 220. And that leaves us with a P&L figure of 2,880. Now, the wages and salaries then were a straight figure of 68,250. We take away the amount allocated to the health shop of 4,200. So the amount to go into the health centre's profit and loss is 64,050. Now, the purchases of supplies then for the health centre itself, well, the purchases were 7,700. That's what we actually paid out of our bank account. Now, we owed an amount of 1,600 since the start of the year. So of that 7,700 that we paid, in actual fact, 1,600 relates to last year, so it's taken away from this year's figure. But then we have an amount that we owe at the end of the year. We haven't paid it yet. So to get the actual used figure or the payable figure, we add that 2,560 and we get a profit and loss figure of 8,860. And that's the figure that goes in as an expense in our profit and loss account. Insurance is a straight figure of 5,500. Take away the amount allocated to the health shop of 1,000, and that leaves us with an expense of 4,500. The telephone, once again, we paid 2,160. 500 was allocated to the health shop. So the profit and loss figure that applies directly to the health centre as an expense is 1,660. Now, we've already done the loan interest figure, and the figure now that applies to us in the profit and loss account as an expense is this figure here, the amount that's relevant for this year. And this was repaid on the 31st of May, so therefore it's 1,000. So just looking at those figures again, we have the light and heat, 2,910, we discussed that. The cleaning was 2,880. The wages and salaries are 64,050. The purchases resupplies is 8,660. The insurance is 4,500. The telephone 1,660, and the loan interest is 1,000. Now, just moving on then, and we've discussed that figure. Now, the other thing is that, well, the depreciation figures really. Now, to be honest, you needn't do a working for all of these if you think you're fairly sure of your answer, and that sometimes you just don't always need to show a working. Now, the buildings were 500,000 plus 140,000, and because we bought 140,000 during the year, so that's 640,000 by 2%. The charge for this year is 12,800, and remember, the revaluation does not happen until the end of the year, so that's the figure that goes into the profit and loss. Our equipment was 90,000. We bought 24,000 this year. Multiply that figure by 114,000 by 10%, and that gives you 11,400 for this year. And our fixtures and fittings, 30,000, there was no change by 15%, and that gives you 4,500. Now, so in our profit and loss, and there's our depreciation figures, buildings, equipment, and fixtures and fittings. So we add up all our expenses here, and they give us 119,980. Now, we take that from our income, and that gives us, take one from the other, we get a net profit of 200,050 euro. Now, we've already worked out what our reserves were at the start, which were 79,770. This effectively is the appropriation section of your profit and loss account. And we add that, so therefore our revenue reserves or our profit and loss balance at the 31st of the 12th, 2020 is 279,820. Now, okay, that's part C of the question. And really, if you've this practice, I would imagine you'd manage this quite easily. The next thing then we're moving on to is the balance sheet. And I suppose the only thing we have to watch there is what do we do with the revaluation? Well, it's very useful. And once again, now you need to know the rules, I suppose, on a revaluation, but this is very straightforward. The buildings to this point were 640,000. The accumulated depreciation to this point was 20,000 plus the 12,800 that we charged this year. Now, what do we do in a revaluation? We'll debit our asset, in this case the buildings, with the increase, which was 260,000 to bring it up to 900,000. Okay, and we credit a revaluation reserve with that figure of 260. Then we will debit the provision or accumulated depreciation account with the total depreciation to date, and we add these two figures together, and that gives us the 32,800, and therefore we credit revaluation reserve account with 32,800. Now our balance carried down and brought down here is 900,000 in the buildings. Now you'll note there will be no balance coming forward in our accumulated depreciation because revaluation happened at the end of the year, and therefore, all the depreciation has been debited out to the revaluation reserve. And we now have a revaluation reserve account of 292,800. The other thing we must, as I have it here, the other thing we must watch, and just remember not to forget, is our bank balance was 22,370. But not forgetting, there was a dishonored check of 400. Now, what have we done with that dishonored check? We have credited our bank account, and if you like, we have debited our debtors or our clients' fees receivable account with that 400 because they owe us that 400 again. So now the correct balance actually in our bank account should read 21,970. Now, coming back then to the question, here the balance sheet, and it's all there on the same page, is now we have our fixed assets. Our buildings now, the value, if you like, the new costs, if you like, we put it in as 900,000. The depreciation is nil, and the net book value is 900,000. The equipment now, taking account of the one that we bought, is now 114,000. We add the depreciation that we had at the start, which was 18,000. And we add the 11,400 that we charged this year. And that therefore gives us, 29,400. And that leaves us with a net book value of 84,600. Our fixtures and fittings are 30,000. 9,000 plus the 4,500 we charged this year gives us 13,500. So that gives us a net book value. When we take one from the other, we get 16,500. Now, we just do the figures here. This is 1,044,000. Underlined, forget about it, that's the end of it. We do our depreciation, that's 42,900, that's the end of that total. And then when we add the net book values, it's 1,000,000 and 1,100, and we leave that open because we add on any other, if you like, fixed assets that we may have. Now we have financial assets, investments, 250,000. Okay, now there should be a total in there, and it's not actually written in, but the total should be 1,000,000, and you can fill that in yourself, 1,251,100. 100. I'll say that again. That figure in here is 1,251,100. Then we have our current assets. Our closing stock for the shop is 2,350. Heating oil is 300. Our cleaning prepaid is 220. Our clients' fees due at the end of the year 1,320. And the new bank balance is 21,970. So that gives us 26,160. And then less our creditors due within 1 year. Our clients' fees prepaid at the end of the year were 1,540. Our health centre creditors are 2,560, and there's electricity due of 540. And when we add those together, we get 4,640. So when we take our current liabilities from our current assets, we get a figure of 21,520. We add that to 1,251,100, and that gives us 1,272,620. And that's our total net assets figure. You can call this figure here working capital or net current assets, and they're both equally acceptable. In our finance by, because this is a company, we'll have share capital and reserves, and we'll show the authorised, even though it doesn't come into any calculations. So the ordinary shares are €1 million. The issued shares are 700,000. Now, the reserves then, well, we've worked out our revaluation reserve to be 292,800, and the revenue reserve is 279,820. And where do we get that figure? From up here in our profit and loss account. 279,820. That gives us 572,620. And therefore, our total capital employed is 1,272,620. And you kind of shout hip, 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 hooray, in the sense that you're very confident, 95% confident that your answer is fully correct. Now, one little area where students lose marks, and this is just a whim of the examiner, really, she always insists that the revenue reserve must always be the last reserve that goes in. In other words, if you had the revaluation reserve after the revenue reserve, you would be penalised a mark. Just something to watch out for. And likewise, someone might say, do we not have the loan? No, we don't, because, should we not have creditors due falling due after 1 year? No, we don't, because it was repaid on the 31st of May of this year, so we have no loans. But if there was a loan, you would have creditors falling due after 1 year up here, and then whatever it is, a loan or a debenture, and you'd put the figure out here and add it on here then to your share capital and reserves. Now, and that's really it, and that's a service firm question. Now, just moving on then, what will I say? I'll just move myself down here. Really, okay, what are the functions, if you like, of a service firm account? Just now, look, service firm accounts, farm accounts, and club accounts, a lot of the theory is the same, really. And I have this here kind of on a page along with farm accounts. No harm for you to have it, and just, have a look at it and see what you think. Now, the functions of service firm accounts are the same as for any business. To calculate the profit or loss of a firm. To keep the records of amounts owed to and by the firm, in order to calculate the tax liabilities of the firm. Accounts would be needed when applying for loans or grants, and to estimate the value of a business at any given time. And then you have another bit of theory here. What factors a lender should consider before granting a loan? Okay, now one thing here, and this could come up in any question, to be honest, to remember, it must connect to the question. You must relate to the question when answering something like this. Like we'll say, gearing, has a firm current borrowings which may make it difficult to repay the new loan? Profitability, the ability of the firm to pay interest on the loan. The purpose of the loan, is the loan likely to make the firm more profitable in the long term? Security, does a firm have adequate security to offer to cover the amount of the loan? The person, what is the creditworthiness of the borrower, the credit ratings, track record, etc.? And the period then, how long is the loan for? That is, for how many years? Now, that's it really. Now, let me see. Now, one thing you could have a go at yourself is the little bit of theory that's here at the bottom of the question. State 3 items of information that must be included in a director's report. Now, I'm going to leave that with you. And in the next lecture, which will be on Chapter 7 on cash flow statements, I will just make a quick reference, actually, to what I would expect to see in an answer to a question like this, where they're asking for information that must be included in a director's report. So that's what I'm going to leave you with at the end of this lecture on service firm accounts. So thank you for watching. I hope you found this lecture useful. And I'll be with you again in the next lecture and the next chapter when we're looking at cash flow statements. So until then, thank you very much for watching.